Hi everyone. So I am currently in Tuscany. Just going to give you a bit of some backgrounds. What have we got there in the background? We've got some of the cypress trees and a nice view in the background. There's a plane busy trying to take off, and then we've got some kids playing in the hotel pool down there. And yeah, it's been very, very nice. So basically here just for a friend's wedding, and it's so beautiful. And although I don't have to work on the weekend, I really thought I would kind of include folks in this. I think it's just such a nice location, and I don't mind doing this. So I thought I would just quickly record from this, and hopefully the noise isn't going to be so bad and so distracting. As I said, I've got that cicada in the background, so it's obviously thoroughly enjoying itself. And it hasn't made a noise at all up until this moment. So anyway, so let's proceed, and let's just see how things are going. I'll try and keep this relatively quick and to the point. So this coming week, my main concern is really focusing around monetary policy statements. And really the threat of inflation is still looming, and it has to be brought under control. There's no option. It has to be done that. And so therefore the question is going to be what is the language? What's the approach? What's the speed, the rate of rate hikes that is what's going to happen and how that's going to impact the markets. Okay, so that being said, let's go across the markets. Let's have a look at the charts in the background. Let me just move this off to the left, and let's have a look at this. We'll start off with the Volatility Index. The Volatility Index hasn't changed, guys and girls. I don't think there's much to be expected from this. Although we look at it every single week, the shift hasn't really broken, compared to what happened here in sort of 2020 when we had COVID, the initial quarantine, the very first quarantine. Nothing much has shifted, and therefore I really don't think it's worthwhile commenting it unless there is a significant shift, other than the fact that we can see here that it's generally producing high lows and high highs, and therefore it is kind of largely just staying the same. So excuse me, next we have the dollar index. So dollar index was, to my mind, overextended. It's produced a bearish rejection candle here. The question is, should we break the low of that? We could see price coming back down towards 100 at the very least, if not further down towards, say, 90 or 96, 95. I would say that the weekly has produced a small bullish indecision candle, or at least a sort of a spinning top of sorts, and therefore a break above the high that would indicate the dollar is going to continue to the upside. And there is some real potential evidence of this being the case, that this is likely to happen. And so this is something I'm going to be watching, as a break of the low or the high of last week's candle. What does that mean? So if we have a look at euro dollar, euro dollar's had a really nice, strong, beautiful rejection on the monthly of those lows at the bottom of a significant historical range. It's got a very nice bearish weekly trend with a nice little indecision candle here. So looking at the weekly in isolation, the trend is strong. It should continue down. But looking at the monthly, it's at the bottom of a range. It's produced a bullish rejection candle. And therefore, there's really a valid possibility if we break the high that we're going to go back up towards the middle of the range. We're not necessarily going to exit the range. So again, same as last week, we're caught between what is the future of the dollar? Is it going to continue? Is it going to break out the range? Are we going to break out of this range now? And therefore, we're going to go into a new phase of the currency markets that we haven't been in for 6 to 8 years. Or are we going to just go back into where we are? More of the same. Okay, so this is something that there is no clear answer on that. It feels as though maybe things are going to change, and so that is something we have to be cautious of. And therefore, I think that looking at the weekly, monitoring those highs and lows is very, very important. We could break the low and then go back up, and we get a bearish, kind of bullish engulfing candle, something that breaks the low and then reverses on it. So I think the initial part of the week is going to be incredibly choppy and dangerous for traders, having to be cautious of that. You need that kind of situational awareness of what's going on. So looking at cable as well, those weeklies look beautiful. They're back up against major zone levels, and therefore break of the low should be a continuation to the downside. One other scenario is we continue down, back down to these major levels, and then we reverse from those. So we get kind of a double bottom or a higher low, and that would happen over the coming months, and then we sort of revert back into the range. So any of those outcomes are possible, but it does really mean that we have no fixed direction at this time, and therefore the risk is higher, as opposed to me just saying, look, we're going to pull back. I think we're going to just resume the trend. At this point, it really is kind of sitting on a fence and could go either way. We've got the Australian dollar against the US dollar. It's pulled right back here, and again, they're all at major zones. That monthly chart looking really nice and bullish. In isolation, that indicates that we're going to get a weaker US dollar and a stronger Australian dollar. Here again on the Kiwi, it's indicating potentially we're going to get again a stronger Kiwi dollar and a weaker US dollar. If we're going to have a look at dollar yen, this is the only chart, again, it's pushing right up at the highs. And so again, we had a nice natural pullback, very strong bullish engulfing candle, which in isolation implies it's going to continue higher. So my understanding is that the Bank of Japan isn't necessarily happy about this, and that they might implement some changes to do that, to try to push it, to bring it back within an acceptable range for them. But we're going to have to see how that ultimately plays out. We look at dollar Swissy. Dollar Swissy itself has had a very strong correction with a small bullish inside candle. So again, strong bearish rejection on the monthly, which would imply weaker dollar, so that dollar Swissy would, in fact, a stronger rejection than the euro against the dollar. Okay, so therefore we're just getting solid mixed signals. We're getting bearish rejection or bullish. We're getting range-bound behavior on the monthly, and we're getting trend-based behavior on the weekly. So just hopefully that kind of makes sense to you as we go. Then we look at dollar CAD. So dollar CAD is back well within its range, and therefore for now I'd stay within that range-like behavior, but wouldn't be focusing on these because of that anyway. Let's have a look at the ruble. The ruble is kind of staying again roughly where it is now that it's kind of found its next zone, and so I don't expect to see much there for now. If we move on to the commodities, we have broken out. So this breakout we were looking for looks really good. At this point in time, I'm expecting a continuation to the upside. There's nothing about this at this point in time that hints that it's done. I'm looking for it to continue to break these highs and to continue on in that direction. So that means that for me, that's probably implying that energies, oils will be the most attractive at this time. Gold, for example, is kind of range bound at the moment. It's trying to produce a higher low. It's battling with that 1865 level, 1866 level, and therefore it's going to attempt to do that. But look at this. We've got an engulfing doji candle. So it's basically an engulfing indecision candle. It really has tried to break both below and above outside of the range and doesn't know which way it wants to go. So just signifies indecision. If we then move on to silver, just to get another look at that by comparison, waiting for the very thin internet connection here to see how it behaves. Again, we've got a similar thing here. We've got this sort of engulfing spinning top or doji, whichever way you prefer to call it, not offering much clarity. Then having a look at, say, copper. Copper is behaving more bullish. All right, so that could be then we might see metals are starting to climb if we're getting clues for some of the minor metals, smaller metals, as opposed to the major ones such as gold and silver. Let's have a look at natural gas. Natural gas is one of the constituents where I do believe it's going to continue to go higher, but it is very volatile, and I don't think it's ideal for trading for those purposes. So let's have a look at crude oil. So far, kind of I would watch. I think there'll be some opportunities with the major currencies, but they're going to swing a little bit while they do that. Whereas with, and not so much with metal commodities, but with crude oils, I think there's a continuation to the upside. So I feel a high degree of probability and confidence with trading those to the upside. Obviously keeping an eye on levels and taking profit as I go, but at this point in time, there's really not a lot to stop them, and they do have, what I'd be looking for, to me would be a crucial reversal sign, would be a very strong rejection candle, maybe when they get back up to the old highs. So if we get back up to 122.70 for Brent crude, and then get a strong rejection off that, then I'd be like, okay, we're going to see a deeper retracement after that. But for now, I expect them to continue up to those levels. And so there's some good money-making opportunities, for me at any rate, on the way there. Sugar's a mess. I'm going to stay away from it. It's really battling to continue on. Let's have a look at coffee. Coffee is also trying to continue, but look at that. That is a really strong bullish continuation candle. And actually from that, I would expect us to really keep going. It wants to break to this level, but that 236 level is a problem for it. So we're going to have to see if we can make through it, but it looks like that's where it wants to go. Wheat, on the other hand, was quite interesting. You can see it's overextended here. It's exhaustion. It's failing at this point, and it's really overdue for a correction back down, potentially back down to these highs or even back down to 1,000, that level over there. So I'm expecting this to have a correction or ultimately consolidate, but I'm not expecting it to continue. It's just too much failure over here, followed ultimately by a bearish candle. It's not showing any signs of recovery. It's not showing any signs of rejuvenation. It looks very much like it's done or cooked. Cotton, similar thing, overextended, small bearish candle, and this to me looks like it is either going to consolidate or head lower, but I don't expect it just yet. I'm looking at this level of support or resistance. It's trying to stay above. I'd have to see a very strong bullish candle off this next week to feel that this is going to continue upwards. I'm not really seeing it at this time. Okay, moving on to the global indices. So global indices, that's a really nice strong bullish candle. As I said last week, we've come back into these levels, pretty predictable, come back into it. Now the question is there going to be a continuation to the downside? Are we able to do that? I have to say that this is not an encouraging sign. We were really unable to get past these levels, and therefore, I think there's a wedding happening, another wedding. There's been a lot happening. And so therefore there's a high probability it's going to struggle. So a break above this to me is a very clear signal. Okay, we're going to resume. We're going to go back up, especially on the weekly. So this behavior here is pretty much what was anticipated last week, and this is where we are. So this week is where I was hoping to get clarity, but you just got to wait another week. Let's have a look at the S&P. So S&P as well. This is really the battle. The S&P is battling here with that 4,200 level. Specifically or closer to it, 4180. I need to see it continue, and preferably I'd like it to break the high before it breaks the low, but this is an issue. There's really, looking at that monthly in isolation, it could equally head lower from here, and that's why this week is going to be interesting, because by the time where we are at the end of the week is going to be a bit of a clue, and the media is going to, if it's going to head low, the media is going to make a big stink about it. Now, there's some records saying, look, this has been one of the worst starts for the Nasdaq, I think, in history at this time of year. So if you compare it historically, it's not been a great one. For example, we made a really good push-up on Thursday last week, and by Friday we kind of closed to the downside on the Nasdaq. So there's a lot kind of hinting at, although we have slowed down, there's not much hinting at the fact that we're getting stronger. So again, you can see this level here at 12,500. Are we going to break below that? We'll start heading down to the next kind of major levels there, and we'll have to see how that goes. So look at the mini Russell, and I think there might be some clarity that comes in when we have a look at the equities in a moment. Again, for example, the Russell 2000, this is going to be one to watch. We've got a relatively strong uptrend on the daily. It didn't finish that, it wasn't such a weak finish. This could be leading. If this breaks to the upside, we can probably see some of the other US majors kind of slow down a bit. So maybe 2-3 weeks, they'll start to push a little bit higher. So the Russell is really, for me, is the one to keep an eye on, because it's actually looking a little bit more bullish than the rest, and therefore would be a leading indicator at this time. Bigger pardon, let's have a look at the FTSE. So the FTSE is managing to hold its own, managed to kind of not really go anywhere. It's battling with that 7,600, and I'm just looking at it here. This is a relatively bearish signal, so this usually implies, looking on the daily, we're going to head lower, we're going to head down towards, say, 7,400. Okay, it's just a bit of an observation, just something that's going to happen there. We'll see the DAX. The DAX as well, still holding. It's got a higher low, high lows in the weekly. It's still trying to finish higher. It ultimately closed. It's sort of most of its activity was higher than the previous week, and the monthly candle is still looking relatively bullish for the month of May. I can't believe we're in June already, people. And so this again, I'm looking to see if that can push higher. So moving away from the US markets, looking at the Russell 2000, small cap companies, and then moving out across to the UK and to Europe, it's looking less dire, less bearish. Euro stocks, just to have a look at one more, so let's go and have a look at that one. Also, again, look at this daily setup here. Nice pullback, bullish candle here. It's just got to, we've got to see how it goes with that level. We've got a higher low here. In isolation, a lot of these weekly charts look pretty good on the non-US indices. So I want to see how they ultimately finish. The Nikkei, look at that, really strong finish, pushing to the upside, looking bullish. It's not looking bearish. So it's not to say that the rest of the world isn't vulnerable to what happens in the US. If the US gets hit or hurt in any way, we're all going to feel it. But what I'm saying is right now, it doesn't appear as though there's anything inherently toxic that is currently infecting non-US markets, and so that's interesting to me. We've got a small bullish inside. Let's call it a doji at the moment on the monthly for the S&P and ASX in Australia, and that's still looking sort of more bullish. Look at that daily. That looks like that is keen to just keep trying to push a little bit higher. All right, so let's move on to the equities of interest. I want to make sure that I keep this relatively brief. You can just hear Royal Mail unable to maintain that, and ultimately has pushed and closed right near the lows, just closing at the bottom, implying that it's got further downside. Okay, it's got further downside, so it doesn't look very strong there. Let's look at Amex. Amex, that candle didn't really go anywhere, so most of last week didn't really go anywhere. It's just treading water is basically the way to put it. So if it is just treading water, my expectation is this week, can it hold or can it manage to push higher? But it hasn't given any, it's not giving a lot of clear clues. So sometimes price action will give very obvious clues. This is where I'm going, lower or higher, and sometimes it'll be, I don't know where I'm going. So it honestly doesn't clarify stuff much. For example, looking at Apple overall looks okay. It's produced this bearish candle up against the 150 level, and therefore it could continue low. So a lot of these, it's going to be worthwhile watching the next week to see if we break the low or the high. This looks more like a bullish breakup. When I look at ARC, this looks like a bullish breakup building up on the daily. However, some people might argue that this is just simply a bear flag, and therefore break to the downside is actually another shorting opportunity. So again, I'm going to be watching that to see if that is ultimately the case. This is usually looking more bullish, but that doesn't mean this couldn't result in a bear flag, right? And again, a lot of these, I'm going to have to take everything into account so that I can take the context of it. This had a really nice bullish move previously. AT&T is now producing an inside spinning top, and therefore it's not looking super strong, but also not looking that weak. Look at Berkshire Hathaway. So Berkshire Hathaway has come back to his previous level, bounced up, and then come back into it. So again, to me, that says indecision. In fact, it's not inconceivable that this could still come down to 293.20, touch on that level of previous resistance and test that as support, and then bounce back up. So kind of what I'm seeing at the moment, what I'm sensing as the story is unfolding, is that the markets might just not really be ready to go back up yet, and they might just kind of tread water. Not all of them are like that. BP is getting ready to continue. This looks like a pretty strong, relatively strong continuation signal. This might often be referred to as a hanging man, which can often occur at the top of moves and therefore break of the low. That would mean that the market's going to head lower. but the monthly has managed to close, and the next month is already above that level of resistance, keen to push higher. But if you look here, you've seen exhaustion at this point, specifically, let's call it 33, 34 bucks, where it struggled to get past that. So I'll keep an eye on that, but that's looking more bullish than bearish, unless there's a surprise coming. That's the only way you'd get a formation like that results in bearish, is if there's a surprise, as opposed to just a continuation of normal market activities. There's actually a negative surprise coming this week that would knock it. Again, here you're looking at ExxonMobil, looks really bullish, nice little continuation, but it could be running out of steam. And actually looking at the monthly, it's back up against these highs, right up against that 100 buck level, and it produces a sort of it's a spinning top / doji kind of impact, which also could result in just a bit of a hanging man shape. So it's a combination of all three, and I'm not going to get into the details of specifically what it is, but just that's the combination of messaging that it's giving. So meaning that it's not really sure what's going to happen at that time, but it looks more bullish than bearish to me. Then we've got a mixture here. This is a disaster. We've kind of got this bearish candle followed by an inside bullish candle followed by an inside red candle, bearish seller's candle. This isn't really going anywhere. It's just trying to tread water. So that's Coca-Cola. Then we look at General Motors, is desperately trying to turn around. We've got a relatively flat MACD here that was giving us bullish divergence. That's just kind of gone flat at the moment, and it's got a little bullish overextended candle there. And so you can often get reversals at these times. No real clues here, guys. The market itself does not know where it's going to be soon. It doesn't. Excuse me. So then having a look here at JP Morgan Chase, good move up recently. It's managed to push up. It hasn't gone anywhere the last week. So what does that tell me? It just says that the last week, a lot of these markets previously had been overextended to the downside, really looking desperate for a move to the upside, did it, and now they don't know whether they can go any further or whether they're kind of screwed and now they need to continue to the downside. So again, there's very much a possibility here for further moves to the downside. I'm not seeing any major kind of green shoots of potential strength. So I'm going to exercise big caution on this, because this is across all these charts, by the way. The dollar itself doesn't really seem to know what it wants to do. The euro, the pound, they don't really seem to know what they want to do. And then I'm looking at stocks, equities. They don't really seem to know what's going to happen. So this week, the market is going to either make a decision, but the point is it's going to be incredibly choppy, I believe. So this is looking a little bit more bullish than bearish. That's Netflix. Then we go through to NVIDIA. NVIDIA, again, indecision candle. I could almost skip to the end here. There's nothing at this point that is looking like it's offering a different story. Even here, PayPal, just weak weakness. These could all continue down. Okay, so I think let's just do this. Let's get to the end where this is now. Interesting enough, okay, Spider here looking to break out. This is a bullish sort of range bound thing. It's got to break up above that to break to the upside. It's trying. Basically, that's the difference. It looks bullish, but it hasn't succeeded. And that's its next step, but it's also at the same time as why has it not been able to? It is trying. It is actually not looking that strong. Spotify is managing to creep up, but this could be a continuation set up here on the weekly. We could just break the low and just carry on down. Let's have a look at Tesla. Tesla's not looking much better at all. Actually, that monthly looks very much like it wants to keep going down, which puts its next major level at 541. And then we've got, say, Vanguard S&P, which is just treading water where it is. So they had so basically to recap, they've had a really good last few weeks, but just the last week, most recent one, not looking that good. If we then sort of move on to the T-notes, they're all looking very much like they're perhaps ready to continue. That's a bearish engulfing candle looking to continue to the downside. Let's have a look at Euro Bubble and the Bund. I mean, the bubble here is closing almost right at the lows, very bearish, broken through major levels, looking to go down. The Bund as well, and you just know that there's no way cryptos can survive that either. Okay, so cryptos, although they did manage to break a little bit higher, so that was kind of what we expected, they're under immense pressure, and they're not at this point. There's no signs of them breaking free, so cryptos are hugely vulnerable in the same way. No confirmations in terms of, okay, look, there we go. We've got that confirmed shift. All the markets right now are looking as though they did have a nice, bit of a recovery, but they're not out of the woods yet. In fact, looking at Binance, that looks to be a potential flat level breakout to the downside, looking relatively bearish. Okay, and then we've got Solana, the Solana one, which managed to kind of break through that level. It's got bullish divergence, and I do expect it to attempt to climb a little bit higher, but it hasn't managed to succeed. It's not really getting there yet. So here we are. I can kind of recap this time. It's a little bit of a shorter video, thank goodness. But I would say from all of this is the market generally and genuinely has no idea what's going to happen this coming week. For whatever reason, it's going, look, Because what happens is, it's a cumulative effect. If the market gets a bit of a bullish buy, and then other people jump on board, and then it kind of snowballs from there, and you get a tipping point. And what's actually happened was, you got the initial buyers coming back in, the buyers coming back into the market, but then not much of a follow through last week. And so that kind of, so now everybody's, well, okay, I was expecting a bit more of a follow through, and we haven't got it, and it's across the board. So I think there's a lot that's really, right now, for me, the biggest thing that we need to be watching is the US dollar. Why? Because either that or the euro dollar. If the euro dollar has some really unexpected surge, then it might bump the US dollar out of its kind of its coma. But otherwise, it's the US dollar that is the only really common thread that runs through all of this. What I can say is that equities outside of the US seem to be doing fine. They're not really as concerned. They didn't really go into they're not treading water. They don't seem as uncertain. But certainly you can look at major commodities per se, other than which is interesting because wheat has come right back down, but you can see that crude oil, or certainly energies, look like they're going to continue to the upside. So that's interesting because wheat is one of the factors included in the inflation, and it's not so much, based off this, not really looking like it's as vulnerable. So for me, my approach to the markets this coming week is going to be focusing probably mainly on crude oils and being very cautious, watching from the sideline what happens with the weekly candle, the highs and lows of the weekly candles with regards to the US dollar, the dollar index, the euro dollar, while at the same time watching what's happening with the weekly candles on the S&P, the US indices. And they'll move together. So then I'll likely be able to see which way it's going to go. But I am saying at this point, as much as I don't want it to be the case, I'm leaning slightly more towards it possibly being a bearish continuation this coming week, meaning that the markets possibly consider their idea of testing the waters lower. They should be stronger than they are, and they're not. They should be looking more bullish, and they're not. So definitely I would exercise major caution, and again, that's going to impact cryptos, it's going to impact everything. So for me, that is really that's what I'll be taking into consideration, and just thinking long term. We could be like this for a few more weeks, and then it could start to kind of even out. And really it's be interesting to see what are the major things that are causing global market stresses. What's in the news? Is it the war with Ukraine? Is it inflation? What is it? Is it everything? And yes, what's going to kind of add some light at the end of the tunnel, because that'll be enough to boost the market. So not seeing any signs of that yet. What I would like to see is a really nice bullish weekly candle by the end of next week. That would be enough of a sign for me to say, okay, we're probably going to continue and go back up into a longer term uptrend. I'm just not seeing that at this time. And yeah, and actually right now it's looking like it's thinking about maybe resuming lower. And I have to be prepared for the fact that if that happens, this could be a bigger drop, because now it's panic. This is almost like that last-ditch effort to hold the line, and if it doesn't work now, holy cow, we kind of like, this is a big move. And so what could happen, it's conceivable that if we move to the downside, the move to the downside could be a really frighteningly big one. It's possible. But I guess the silver lining would be that then we'd have to start recovering after that. But I would just say that if we're going to get a really much bigger move, that could be something that happens this week. It could be triggered this week. So obviously, nobody wants that to happen. But again, just super, super cautious, because it's not outside the realm of possibility. Anyway, I'm going to leave you with that, ladies and gents. Take care, look after yourselves, and I will be speaking to you from Spain next week. So thank you very much.